Welcome to the ASX edition of Trade the Trend, a weekly video about where the stock market is going. This video is going to focus on the ASX 200. I'm also going to have a look at gold and uranium, so make sure you stick around for that. I'm going to cover the S&P 500 in a separate video. I'll leave a link for that in the description section below. As always, this is general commentary. It doesn't take your personal situation into account. With all of that said, let's get into our first chart. So I've got the ASX 200 up on the screen, and it really has been a fascinating couple of weeks with the market swinging within this trading range. So what we've had, we're really seeing the market testing both sides, testing up at resistance at around 7,400 and then quickly falling back to support at around 7,040. And just yesterday the market was sitting right in the middle of the range, right on those moving averages. And on Friday, we've had this heavy selling, which has taken the market down beneath support. So what I want to do, I want to jump over to a 4-hourly chart, just get a closer look at the whipsawing in this price action, and you can really see quite clearly when you look at the 4-hourly that it's been a case of sharp moves in both directions and on several occasions. And to me, that really indicates a lack of conviction and a lot of uncertainty in terms of where this market is going. And it really is, when you look at it just over the last couple of months, it's a directionless market. And when we go back to the daily and we look at it over the last 19 months, again, a very directionless market, and that's something I spoke about in last week's video when I looked at the weekly charts, and it's worth going back and having a look at that if you didn't see that. But the key now is, what's going to happen? What's going to happen here? Is this a breakdown, which is going to see the market move back down towards the March low and potentially lower, or is this going to be a fleeting break before the market rebounds? It's look, of course, I don't have the answer as to which one it's going to be. But what I'm wondering is, will this be a false break? And I say that because I've seen this sort of price action many times before, where the market breaks and doesn't get follow through selling. So I'll give you an example. I'll give you an example from June 21. So just look at this. So we had the market trading within a range, and we got a breakdown, and then shortly after the market shot back up, and that was a sign there was no follow through selling, and then we had several weeks of strong price action. So I'm not predicting that's going to happen by any stretch, but I'm on the lookout for it happening. Because this has been a sharp move lower, the market would be, I'd say, getting somewhat oversold after a few days of selling. So it's really important to see how the market trades over the next few days. If it's going to be a false break, I'd expect to see price action like this, where it quickly rebounds and moves back within the middle of the range, if not higher. That's a positive scenario. If, on the other hand, we see price action that really just sits on its hands, doesn't go anywhere for a few days, gets a bit of a narrow consolidation going, that opens up the window then for a move to the downside. So narrow, tight consolidation, not good. Strong rebound, snapback rally, that would be positive. So let's just see how that unfolds over the next few days, and also what happens in the US is naturally going to have an impact on how this all goes as well. Jumping over to the small ordinaries, not really a great deal to say here that we haven't already said. It's not a great deal of help in terms of working out where we are. It's in the middle of the range. Well, it's actually in the lower half of the range now. It's still stuck below these moving averages, which has been the case for a couple of months. Whilst markets are below moving averages, they're in a position of vulnerability. I think that, as I've been saying, I've been saying this for weeks, if not months. I'm just not in a hurry to do a great deal in the small ordinaries as a whole whilst we're in this range. this could turn out, like the Russell 2000 in the US, this could turn out to be a basing pattern, but we just need to wait for the price action to confirm it. And whilst we're sitting below moving averages in the bottom half of the range, it doesn't give a great deal of confidence to say, now's the time to start piling in. In fact, now's the time, I think, to be cautious, be stock selected. There could still be individual stocks that present opportunities, but the market as a whole is not supportive of, I think, of broad-based buying at this point. I think we need to be looking for the right opportunities, managing risk, and this situation will clear itself up, and trending markets will return. They always have. I can't imagine this is going to be any different. We've just got to let this work through, however long that it happens to take, and it will be on the market's time frame, unfortunately, not ours. Now, if you're getting some value, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. It just tells YouTube people are watching. YouTube shows other people. Helps me heaps. Hit the subscribe button if you haven't already done so, if you're just finding this channel for the first time. And come visit me over at motiontrader.com.au and see whether the work I'm doing with trend identification and risk management might be able to help with what you're doing with your own portfolio. And also remember, I'll be presenting at the at a trader seminar in Melbourne in 2 weeks' time on the 22nd of July. So if you're in or around Melbourne and you want to come along and listen to me speak, a couple of other great speakers talking about markets, go and run for a couple of hours. You can register. It's actually free to come along. So I'd love to meet you. Love to meet the people who listen to my videos and members of my service. So yeah, think about jotting down your details and coming along on the 22nd on a Saturday morning. All right, so let's move on to some commodities. Oh, and I'll leave a link for this in the description section below. And if you can't find it, send me an email at jason@motiontrader.com.au and I'll send it over to you. Now, commodities, gold. Let's start off with gold. Look, same as last week. Nothing has really changed here. Gold is still below these moving averages, the 50 and 100-day moving averages. The moving averages continue to roll over. And we've also got, I've just drawn in some resistance here. It's just a small resistance band at around 1,950. And I think really gold needs to at least break back above this resistance point before we can really consider any near-term positive scenarios. Get back above the moving averages. Whilst we're below these averages, whilst we're below resistance, the pressure does remain to the downside, at least in the near term. Now, you might remember I outlined a bullish medium-term case for gold last week. That remains in play. If you didn't see it, just go back to last week's ASX video and find it. I'll detail that, talk about gold from a weekly perspective. I think all that's in play, but the timing of these things, we've had a big move from these lows last year. Everything takes time. I just make that point over and over. We get so fixated on, things need to happen now, but things will happen, but they will happen in their own time. And so I just don't think now is now's the right time to be buying gold against this current downward momentum. Having a quick look at Newmont. So Newmont, the world's largest gold producer, just seeing how this price action's been playing out over the last few weeks. It's just grinding sideways, narrow range below the moving averages. It really does open the prospect that this is going to have another leg lower, maybe test this low from November last year. It could well form a base somewhere around current levels. You could look across. There is like a case for some support coming in somewhere around current levels, but it may do so via lower levels first. So it doesn't seem like a hurry to go out there and rush into gold stocks whilst the world's premier gold stock is sitting beneath its 50 and 100-day moving averages. I'm going to wrap up now with a quick look at uranium. One word sums it up: disappointing. We had an attempted breakout a few weeks ago. Last week I was talking about the possibility of a false dawn because we couldn't get a close above this resistance band, which is at around 1770 on this physical uranium ETF, and it looks like it was a false dawn. We're now back within this range that we'd broken out of. You can see these two converging trend lines. I'd been watching that contracting range for several months. So it was disappointing to get the break and not get the follow through buying. I'm going to remove these lines now because they don't serve a purpose. And I think now uranium's back within this broad trading range. Yet another trading range, which I'm you're more than likely sick of hearing about trading ranges, but that's the current state of market that we're currently in. As I said last week, if something's not working, don't push it. Fall back, wait for the next opportunity. That's what I'll do in uranium. It's we're back in no man's land. We just got to wait. I think the story is now just back off until the price action starts to turn around. And that's the case in several markets. So look, let's leave that there for this week. Hopefully that's been interesting. Hope you get some value out of that. Give me that like, please, and I look forward to coming back talking to you next week. Until then, bye for now.